So today, welcome to Forex Basics Training course presented by Kirui. The course is going to take us a period of a maximum of 4 weeks. And we're going to be learning the basics. And I hope that you are going to learn more, a lot of information that is going to impact your Forex trading journey. Forex trading is not a very hard activity, but it requires a lot of seriousness and dedications so that you can be able to have a better or a clear understanding about the market. So we are going to start from the introduction to Forex trading. And the question that comes into our mind is, what is Forex trading? Or what is Forex? And when we ask ourselves, what is Forex? Forex is simply foreign exchange. So Forex is simply foreign exchange. That is how the name came about. So it is called foreign exchange. And this foreign exchange is simply the process of buying and selling currencies, but now being done online. So Forex trading is the process of speculating on currency price to potentially make a profit. So your speculation is either that the price is going to go up, or you are speculating that the price is going to go down or to fall in value against the other currency. And also we have to know that the value of a currency is influenced by the economical factors that are going on in that place. The political factors will be affecting the movement of a particular currency that you are going to deal with. So these markets enables us to trade, since there is a lot of difference that goes on in currency pairs. If currency pairs could just be stagnating, we could not be able to trade, because we could not even be able to be learning about the market, because the market could not be of any beneficial to us. So this Forex market is the most liquid market, or is the most market that is being having a lot of transactions in the world. And these transactions in a day total to over $6.6 trillion being transacted each day electronically. So with Forex trading, the trading itself, we have said, is done electronically, and the market runs for 24 hours a day, 5 days in a week. So this market runs from Monday 1 a.m. and it runs all the way to Friday 12 p.m. 12 p.m. So Friday usiku on Kenyan time. And also we say all transactions that takes place in the Forex market will be involving buying and selling of two currencies simultaneously. So you will be buying as well as selling currencies simultaneously. Let me show you here. If we have USD and Kenya shillings, this pair will be having the buying price, and also it will be having the selling price. It will be having the buying price and the selling price. And you will see, say the buying price, with the price at which the broker is buying the currency from us will be at 110, and the price at which the dealer will be selling to us will be at 120. So when we go with our Kenya shillings, we want to buy the dollar, we will be selling our Kenya shillings. And when we'll be selling our Kenya shillings, it will be meaning we will be buying now with our Kenya shillings. We'll be able to exchange our Kenya shillings for the dollar, meaning the broker will be buying Kenya shillings from us and selling to us US dollar. You see? So the broker will sell to us will sell to us the dollar at 120 Kenya shillings. You see? So that we will be buying and selling simultaneously, because we are giving out whatever we have and taking out whatever they are giving us. And that's what the market is. So we buy and sell simultaneously. Also, we say on Forex, our currency pairs are traded through a broker or a dealer. And now we know these currency pairs are traded in pairs. For instance, if you want to trade the euro will be paired with the US dollar, or even the euro can be paired with the euro and the Canadian dollar. So the list is long. I cannot even be able to exhaust it. So the list for currency pairs is long. I'm not even able to exhaust the list. So I want to go to display slides and we continue from current. So just a minute, I'm deleting something. So there's this representation here. There's this representation here. There's this representation here. And this representation, we can be able to see this is a currency pair. This is the euro and the USD. So these two pairs are currency pair. And we can see there is euro here and there is USD on this place. So this euro is being called the base currency, and the USD is called the quartz currency. So the base currency is the euro and the quartz currency is the US dollar. So what is the difference between these two pairs? Why can it not be USD euro? Why is it not USD euro? So to answer that question, we'll be able to see that the euro is a strong pair compared to the dollar. So euro is a strong pair compared to the dollar. How is it strong? This is because you will only need one single unit. You don't need one single unit of euro to get 1.1918 units of the dollar. So with 1 unit of euro, you'll be able to buy 1.1918 units of the US dollar. Meaning what? The euro is strong compared to the USD. You see? And now euro is termed as the base currency, and the base currency always appear first in a pair. So the base currency will always be appearing first in a pair, and the quartz currency will be appearing last or second in a pair. You see? And now the quartz currency is characterized by being the weakest pair in the currency pairs, and it requires several units of the quartz currency to buy a single unit of the base currency. You see? So that is the difference between the base currency and the quartz currency. We say the base currency is a strongest currency and appear first in a currency pair, and it is always the strongest. And 1 unit of a base currency equals or will amount to several units of the what currency. Yes. Now let's go to this one. Bid. What is bid and what is ask? What is bid and what is ask? So bid is the price at which the forex broker is willing to buy the base currency in exchange for the counter currency. So the bid dealer price, the broker will be willing to buy the base currency in exchange for the counter currency. So now look, if this broker, if the bid is the price that the broker is buying from us, meaning this is the price at which we sell whatever we have to the broker. Now look one thing here. These brokers or the dealers will want to make profits. You see, they will want to make profit. Meaning for them to make profit, they will be buying these currencies from us at a lower price. And immediately, they will also be selling these pairs to us at a very expensive price. If hata leo ukienda bureau, uko na Kenya shillings, unataka kwenda kununua dola, you just there the bureau, umefika bureau, unamuuliza mtu wa bureau, how much are you selling the dollar? Utapata mtu wa bureau anakuambia we are selling the dollar at 115 and we are buying the dollar at 105. So wewe na haraka zako ukanunua the dollar at 115. You completed the transactions. Kidogo kidogo ukatoka nje na urudi hapo ndani. Immediately hata hujaenda mbali. Naambia nimeona umenirudishia Kenya shillings yangu. I want to exchange this money back to Kenya shillings. Do you know they will not sell to you that currency to you at that same price that you had sold it to them. In fact, they are going to buy the dollars from you at a low price. So they will buy the base currency from you at the lowest price, 105. They will buy at the lowest price, 105, and sell now Kenya shillings to you in the exchange of the dollar. So you can see you will be losing 10 bob for every $1. You'll be losing 10 bob for every $1. So that is how they make money. That 10 bob that you will be losing for those exchange is the money that it is going to go to these brokers as commissions or as their own profits. Okay, now let's look at the ask price. And the ask price is the price at which a forex broker is willing to sell the base currency in exchange for the counter currency. So ask price is that this is the price now where the dealer will be willing. This is the price that the dealer will be willing now to sell the base currency to us, and this price, the selling price that they will be going to use to sell it to us, will be expensive price. So they will sell to us at a very expensive price, but when they will be buying from us, they will be buying from us at a lowest price. Okay. Now let's look at the platforms that we use to trade in Forex. And in Forex, we trade through platforms that is being provided to us through these brokers. And the platforms that we trade using are the MetaTrader 4, MetaTrader 5, we have NinjaTrader, TradingView, Investing.com, Pfizer, and other softwares. So, and these softwares are now used to get the charts for us so that we can be able to do our analysis and so that we can be able to do even our trading. Okay, and there are different exchange rates for different currencies. So exchange rate for each currency will not be the same. The exchange rate for each currency will be changing, and these exchange rates will allow you and me to make money in this forex market. If the market will just be consolidating, we will not be able to make anything. In fact, we will be losing a lot of money because the market will not be moving. And remember, you have to pay the spread to the broker. You have to pay some commission. So you see, if the market will not be moving, you will not be able to realize anything. Okay. So we want to look at what is traded on the forex market. What is traded on the forex market, and there are 5 types of products, or 6 types of products that is traded in the forex market. And the first type that is of the product traded in the forex market is the fiat. When we talk about fiat, these are now the real money, real money. So for instance, the euro, it is the real euro. What is the value of euro? What is the price of euro? That is the currency that we'll be dealing with, will be there. If it is euro, now if it is the US dollar, it will be now the real value of the dollar that you'll be able to trade. If it is Canada or the Canadian dollar, it will be the real value of the Canadian dollar. If it is Japanese yen, it will be the real representation of the Japanese yen. You see, there are also cryptocurrencies. And when we talk about the cryptocurrencies, these are the decentralized currencies, or these currencies are not able to be controlled by any bank, and they cannot be touched. You cannot hold them, you cannot possess them physically, but you possess them either in your devices or in your accounts that are on online platforms. So these cryptocurrencies, you cannot hold them. Even the bank cannot control it. Its statement cannot be read by anybody else except you. You see? So cryptocurrency is a decentralized currencies, and this is being adopted right now. Some other countries now are using it to pay for their trader, for their workers, for their even traders. So the cryptocurrency is a currency that is really coming up, and even these are the currencies that are going to be used in the future to do transactions. So this cryptocurrency include the the Bitcoin itself. Sorry, the Bitcoin. We have the Tron case. We have the Ethereum. We have the Bolka dots. We have the Solana. There are very many. There are almost 3,000 cryptocurrencies that are coming up each day. So these cryptocurrency are very many. And so the main currency that we are likely to be trading in Forex will be the Bitcoin. Also, we'll be able to trade Ethereum. So those are the 2 main pairs that we are likely to be trading in cryptocurrencies. Okay. So there's this index CFDs. Index CFD. And when we talk about this index CFD, when we talk about the index CFD, these index CFDs are pairs that are, these are pairs that are used to indicate the performance of a certain indices, of a certain index like the US 30, the US 500, even we have the US Tech, Wall Street, and other pairs. So the CFD itself means this CFD itself is called contracts for differentials. Contracts for difference or for differentials. And this contract for difference is that they will be trying to compare a certain product like the US 30 under a certain period of time and with other certain parameters to indicate how the dollar could be performing. That's why you can see there's US 30. So that is now the parameter that they're using is that 30 against other parameters to see how the US is performing under 30. There's also US 500. There's also US Tech 100. There's UK 100. There's Germany 100 and etc. So also number 4 is the shared CFDs, and these are the shares for different companies. And these shares include, like, for instance, Apple, Boeing, Tesla, Alibaba, Safaricom, Samsung. So here you will be trying to determine how the Apple will go to be in your trading, if it is going to go up or if it is going to go down. So you can be able to trade these shares. So if Apple is going to go up and your speculation is to go up, you are going to earn profit. Yes. So there's also commodity CFDs, and commodity CFDs are the commodities itself. Like, for instance, products like the coffee, cocoa, cotton, juice, we have even sugar, we have tea. So those are the commodities. Also, we have precious stones. And under these precious stones, we have something called metals. And these metals also include the gold. It can also include the silver. It also include the platinum. It also include the palladium. And you can see there are symbols. So metals are represented with the first symbol, that is X. And then now there are the other definitions that represent their names, like AU, that is for gold. There is silver, it's XAG. There is platinum, it is XBT. And there's palladium, which is represented as XPD. You see, so those are now commodities. So there are also currency index CFDs, and these currency index CFDs, they are trying to indicate how a certain currency itself is performing. So this is the measure of the currency itself of a certain country. How is it performing? How is it economical health? You see, and they represent this data in 1 to 100%. So, for instance, you see the US dollar index will be ranging at around 89 to 100%, 89 to 90 something percent, and it will be ranging there. So some people can be buying or they can be selling when they can see the performance of the US dollar is not performing very well. So you can decide to either buy or sell. It depends with your trading likes or how you want to do your trading. Okay, I want to look at the currency naming. How do we name these currencies? Currency naming. With the currency naming, the first 2 letters that appear first in the currency will be representing the name of the country in which that currency is. And the last 1 letter at the end there will be representing the currency being used in that country. For instance, the example that is below us here is the Kenya shillings. And this Kenya shilling, the first 2 letters represent the name Kenya. The first 2 letters represent the name Kenya. These first two letters represent the name Kenya, and this name K is the Kenya, and the last letter S is the currency being used in Kenya, which is shillings. We can even look at this another example here, the USD, US dollar. And this US dollar, the first two letters represent United States. United States. Then the last letter D will be representing the dollar. So you can see the first two letters represent the United States, and the last letter represent the currency being used in that country. Now there's another pair, SAR. Which currency does this pair represent? Many of you will be saying South African rand, but when they were registering this currency, the first country that took the name S was Saudi Arabia. So the first two letters represent Saudi Arabia, and the last letter R represents the currency being used in Saudi Arabia, which is rupees. Now, there's this one for South Africa, ZAR. So the South Africans were given the code ZA. ZA will be representing here the name, that is the South African, and the currency being used in Africa, which is the South Africa, which is the rand. So you can see. So the first two letters represent the country in which that pair is coming from, and the last letter represents the currency being used in that country. Now, I want to look at the types of currency pairs. And in this Forex, we have three types of currency pairs. That is not the real money, the fiat. Under this fiat, we say we have three types of foreign currency pairs. And the first pair is the major currency. When we talk about the major currency, it is a currency that is usually paired with the US dollar. And US dollar is the majority known currency. Hata ukiwezamsha mtoto mwenye amesikia kidogo, ukiwezamuuliza umewasikia dola, atakwambia ni umewasikia dola. But when you ask that child about other currencies like CHF, they have never heard of it. So you can see the US dollar is now the popular currency, and that is why it is coming on the major currency. So we say any pair that is usually paired with the US dollar, and that pair exhibit very high market liquidity. What do we mean when we say it exhibits very high market liquidity? Is that when that pair is having more volume being traded, or activities ya transactions ziko mingi kwa hiyo pair, na hiyo pair lazima iko paired against the dollar. That is when now that currency will be termed as the major currency. You see? Now here also we have another type of currency that is called the minor stroke cross currency. And when you talk about the minor stroke cross currency, is a pair that is not paired against the dollar. These are currencies that are not paired against the dollar, but this pair also must exhibit very high market liquidity also. So now these pairs, when we talk about the minor pairs, are currencies now ambazo haziko paired na dollar. For instance, now Audi card. Audi card is not hakuna pair ambayo imehusisha dollar hapa. Unlike for the major currencies where you will see every pair is paired against the dollar. Every pair is paired against the dollar. You see? So there's also this other type of currency that is called exotic currencies. And these exotic currencies are pairs that consist of developing and emerging economics. So when we talk mostly about the exotic currencies, currencies ambazo zimekuwa developing, and also these pairs are from emerging economics ambazo bado hazijakaa sana kwa soko. They are still very new. So these markets are less liquid. They are less liquid. There are a lot of transactions taking place on the stock exchanges or even on the real exchange about that currency. And when there is less exchanging activity taking place on that pair, it will mean that pair will be less liquid, and also meaning when the market is less liquid, it means you will be at a risk of not earning profit, because these pairs will be very expensive to trade, and also it will be very less, there will be less activity for that pair. So it will not be moving very fast to the upside, or even moving very fast to the downside, meaning you will not earn a lot of money when trading the exotic pairs. Okay, so we want also to look at when to trade in Forex, when to trade in Forex market. So trading in Forex is always influenced by the trading session that is in place. Remember, we have said this market runs electronically for 24 hours in a day. So when this market runs for 24 hours in a day, it cannot be able to run alone for 24 hours in a day. So watu watataka kulala. Some people want to sleep, some people want to wake up, something like that. So they have to interconnect this market with other sessions so that the market can be able to run 24 hours without too much straining activities. So that's why they had to combine these three major sessions together so that it can be able to move this market. So these sessions are delivered from countries and delivered from the major cities in which most of the transactions are done. So we are going to look at them. And when we talk about these sessions, we have the first session. The first session that that is here is the London session. And when we talk about the London session, it is carried out in the United Kingdom, that is the UK. And the most active pair that will be in the UK will be the GBP, that is the Great Britain pound, and also the euro. So those are the currency pairs that will be active in the London session. So there is Asia session, and when we talk about the Asia session, it involves the Japanese and the Asian countries, with much of the activity kwa hii Asia session being done in the Tokyo Stock Exchange. The Tokyo Stock Exchange is in the Asian countries, that is in Japan, and the most active pair that are going to be traded during this time is the Japanese yen. You see, it is the Japanese yen is the pair that is going to be an active pair in this session. So also there is the New York session, and it is carried out in the United States of America, that is the USA, and the pair that is being traded, or the active pair during this session, is the US dollar. This is the United States dollar. So the United States dollar is now the pair that will be transacted more. That will be transacted more in the United States of America. So now here is the representation of the data. So here we have the time zone. We have the time zone. This one here is the time zone. So we have this time zone here. Under this time zone, we have this time zone is now the New York time zone, GMT time zone, and the Kenyan time zone, which is the GMT plus 3. So the Kenyan time zone is GMT plus 3, and this GMT plus 3 is that we want to see this Tokyo session, or the Asia session, being the first session that opens in the day. So this is the first session that opens during the day, and this session will normally occur at 1 a.m. Kenyan time, 1 a.m. Kenyan time. So this session will be opening at 1 a.m. Kenyan time, and this session will run for 10 hours. Will run for 10 good hours. So watu wa Tokyo wataamka wafanye kazi from 7 and from 8, and they do all their work up to 4 p.m. You see, so watu wa Asia watakuwa wanaamka 8 a.m. Asian time, wanasukuma kazi yao mpaka 4 p.m. the Asian time. So wakati ni saa mbili kule kwao in Asia, it is 1 a.m. here in Kenyan time. And also mtu mwenye atakuwa USA hataweza kutrade the Tokyo Stock Exchange session because itakuwa aje during this time in the US, it will be 7 p.m. It will be 7 p.m. in the US. No. So they will not be able to trade this session vizuri because it is 7 p.m. in their local time. Kumaanisha hata wakati hii session itakuwa inapika kama saa 4 ya usiku kwao, watakuwa wanaelekea kulala. So they will not even be able to participate so much in the Tokyo Stock Exchange session. And we find this Tokyo Stock Exchange session most of the time is characterized by consolidation. Hakunanga activity mingi kubwa sana on the Tokyo Stock Exchange session. There's less activity on the Tokyo Stock Exchange session. There is less activity on the Tokyo Stock Exchange session. So I want to look at the London session, and the London session will be opening at 10 a.m. Kenyan time. Will be opening at 10 a.m. Kenyan time, meaning immediately after Tokyo session is closing, which is at 10, or at times Tokyo session may delay even up to 11. So at times the Tokyo Stock Exchange session may open at 10 a.m. At times may go even up to 11 a.m. because of daylight saving. So at the London session will be opening at 10 a.m. Kenyan time and will run all the way from 10 a.m. Kenyan time up to 6 p.m. Kenyan time. So inamaanisha hapa at this wakati it is at 10 a.m. at Kenya, at London it is 8 a.m. Watu wa London wanaamka kwenda makazi. And they run their operations from 8 a.m. up to 4 p.m. That is when they will be closing their operation. So that the time that's now the local time for the London. So they'll be running from 8 a.m. London time all the way to 4 p.m. London time. So when we compare this time from London to Kenyan time, we'll see the market will be opening at 10 a.m. Kenyan time and run all the way from 10 a.m. Kenyan time to 6 p.m. Kenyan time. And that is what the market is now being able to run for 16 hours, because for 18 hours, because it has run here for 10 hours, and now here it has run for 8 hours. So the market has run for a total of 18 hours. Now let's come to the New York session. And the New York session, they open at 4 p.m. Kenyan time. New York session, they open at 4 p.m. Kenyan time, and they close at 11 p.m. Kenyan time. So meaning it is 4 p.m. in Kenya, at the New York session, it is 8 a.m. At the New York session, it is 8 a.m. and they run all their operations from 8 a.m. up to what time? They'll be running their operations from 8 a.m. up to 4 p.m. their local time. Up to 4 p.m. their local time. So now that 4 p.m. will be at 11 p.m. Kenyan time. So you can see the market has been able to run from 1 a.m. all the way up to 11 p.m. without closing. As much as other countries are going to sleep, the market is still able to run. The market is still able to run for that long. Okay. Now there's something called session overlap. Session overlap. So session overlap occurs when two sessions are open at the same time, and it is the busiest time during the market. Because of what? This is because when two market sessions are open at the same time, inamaanisha there are a lot of trading activities, or there are a lot of transactions going on during that time, or during that busiest time. And when there's a lot of that busiest time, we would like now to see more activities going on in our currencies. You see? Also, biggest movement of currency is more observed on the middle of the week, that is on Tuesday up to Thursday. The reason as to why the biggest movement of the market is more likely to be observed on Tuesday after Thursday is because most of the investors, or even most of the workers, they will be less active in the work on Monday, and they will be less active on their work on Friday. So the time that is the time when they'll be having more strong activities going on or more seriousness on work is on Tuesday, Wednesday, and Thursday. Meaning, if these people will be seriously on work, there will be a lot of transaction going on, and also there will be a lot of trading activity taking place during these days. So you will now be able to find the market start move very, very high, very, very fast because of the session overlap. So when we look at these overlaps here, we have the Tokyo and the London session, and the Tokyo and the London session, they have an overlap from around 10 a.m. Kenyan time to 11 a.m. Kenyan time. This is when the Tokyo and the London session meet. You see? So this time there'll be more trading activity. These banks also will be trying to link with these other banks to see what they have done. So also you have the London and the New York session, and the London and New York session, they are meeting from 3 p.m. 3 p.m. Kenyan time or even 4 p.m. Kenyan time, and they run together to 6 p.m. Kenyan time. So you'll see there'll be this session overlap here, meaning this market will be the busiest market in that time. So also there is Sydney and Tokyo. We cannot consider this so much. The one that we are considering is Asia, London, and the New York. So like for instance, the below one here, Asia and the London session. We can see that the Asia and the London session, they are also meeting at 8 a.m. to almost 11 a.m. Kenyan time. So we'll focus on these first two here, because these are the major drivers of the market. So do not trade on what? Don't trade when there is holidays. And here we are not talking about the Kenyan holidays, no. Because of what? Kenyan holiday cannot be able to influence the trading activities of the dollar. The Kenyan holiday cannot be able to influence the trading activity of the euro. So we are talking about holidays in the US. When there's holidays in the US, don't trade any pair that is paired with the dollar. Because of what? There will be less activity going on the dollar, meaning the other counter pair will be very, very manipulative, and it may mess your balance off. Okay, don't trade when there's news reports. This market is being driven by news fundamentals. So if you trade when there's news release, this news release may either be positive on you or they may either be negative on you. So I don't say news trading is bad, but if you are not yet experienced, don't trade during the news reports. There's also don't trade during the war times. If there is the other countries that are fighting, don't trade when these countries are on war times, because their currency will be affected, and it may have an impact on a trading account. So don't also trade when there's a pandemic outbreak, like the time when there was release of the corona. It really affected the market very, very much. We even saw the Dow Jones losing almost 55% of their capital. We also see S&P 500 losing 46% during that time. So it really affected them. So even you can lose almost 40% of your capital, because the market will be shocked by the kind of news it received. So we are going to end there. We are going to learn on the next lesson on the Forex terminologies. And I wish you well as you learn a lot during this journey. May you find a better understanding of the market. And I hope that you are going to enjoy learning with us and have a successful Forex trading experience. Thank you so much.